But I think some people are saying that, okay, we should have some resistance around $30,000. But when you add like the overshoot, because this gap up here, and I think this is where it'll kind of be caught, and mostly it'll probably be retail buying pressure where it'll be caught, because technically speaking, this is some support here, but it's not really. This is really coming up from gap ups. This is not a significant amount of support, because technically you'll say, we had some like a sell-off here, but this is the Fed selling off. So when you say that it's support, that's why I say it has to be a combination of retail and institutions to have support level. This wasn't like that $500 billion, that $700 billion that was sold off in May, June. That wasn't retail money. Like, so when you say it's support, whose support is it? Like, it's not. It was their support. It was their money that they were moving out of the market, and then they came back in. Like, this was not retailers taking profit that took $700 billion out of the market, and this sure as hell wasn't retail that pumped it back up. Welcome back, YouTube. So the title of this video is "The Time is Near," and the reason I timed it that because I absolutely believe that. And before I get into today's video, I want to propose a thought to you, because we just saw that Goldman Sachs has proposed that the Fed will hike its interest rate up to 4 times this year. And before I go into definite terms as far as what that means, I'm going to pull up some charts here. If you follow my channel, you know that I said that most of the money in the crypto market is institutional money. Therefore, they control it no different than they do the stock market. And in order for us to win and generate wealth and make those crypto millionaires, if we study the cycles of what we've seen in the past, this will open the gateway for us to really capitalize. So in this video, I'm going to cover why the crypto market boomed during the pandemic and what we can expect going forward with these rate hikes, and how we can kind of literally take a step into the crack in the door and make generational wealth and change our lives. This is mostly going to be about positioning. And if we do it right and we look at the facts, we can kind of anticipate what we can expect to happen here and create some windows of opportunity for us to take advantage of. So I want to propose first, what if the reason that the economy or the stock market and the crypto market boomed during the pandemic was all because the Fed lowered interest rates to 0? What if the retailers coming into the market and having the greatest retail boom in history, what if we were just the anomaly, right? What if we were the unaccounted factor that came in, but overall the money was going to flow into the market anyway, because the interest rates were so low that typically when you have lower interest rates, you're able to take more risk. And if you look at the charts here from around September of the NASDAQ and September of the like Bitcoin, you'll see the pattern is very similar, almost identical. And if you also look at the pattern from September of this year and on Bitcoin and the NASDAQ, you'll see the same downtrend. And roughly we're kind of like touching those lines as well. Is that just a coincidence? Or is the money flowing out of the NASDAQ or the institutional money, where they simply taking riskier bets in the crypto market to realize those really big gains? And because now the interest rates are coming back, you're going to have to take more reasonable bets. So you're going to remove some of that money. So as we've seen, roughly 50% of the NASDAQ is down about 40%. And they're comparing that to literally like the dot-com bubble. That's what we're seeing articles around like the 2019-99 era. We also know that since the beginning of the pandemic, the government has been injecting around $120 billion a month and through bonds and securities and stuff like that into the market to kind of add that liquidity to kind of keep us from going into an all-out recession, because people weren't able to leave their homes or start spending money. So now they're saying they're going to reduce that by $30 billion per month and pretty much stop it all together by March or April of this year. What does this mean for Dogecoin, Bitcoin, and the crypto community altogether? Well, that means that we're about to find out what the crypto market is actually made of. Because when you see a lot of arguments saying that, oh, Bitcoin hasn't peaked, or Dogecoin hasn't peaked, and all these other coins, a lot of times the argument is made that a lot of these cryptocurrencies haven't peaked, like Bitcoin hasn't peaked, It should have hit, 80,000 or 100,000. Well, I'm here to make the argument saying that if the money hadn't been flowing in via institutions, because we both know that, well, we both, however many of you that are watching, we all know that the retail investors did not put $2 trillion into the market in the last 12 months. We know where that money came from. So I'm making the argument saying that what if the market rallied, and the reason we had these gains and this institutional really just going frenzy last year was because of the institutions coming in, and they technically the peaks and the valleys and all that kind of stuff. What if they actually overshot where they were supposed to be? This is why I say I believe that we're going to have a mass correction in Bitcoin, and we saw the Forbes article and stuff like that. But this is why I'm saying that I believe that Bitcoin will hit $20,000 before we go into six figures. Now, don't get me wrong, institutional money is going to come back into crypto market. And for the main reason is they've started something as far as for igniting the interest of the retail sector. We now have more retail investors in the markets than at any point in time in history. Amateur retail investors at that, who are not turning over their money to Wall Street, but are instead investing for themselves. That's a big problem for them. So if we have a restriction in the economy and the institutions technically have to go out and rebalance their portfolios and start investing in some of the staple companies, your Apple, your Microsoft, and stuff like that, we're going to have a sharp correction in the crypto market. And technically, this really just depends on how swiftly the Federal Reserve, the Feds pretty much start tapering back the amount of money that they're injecting. But we've also seen this in the past where they've made an announcement and then we had a very sharp correction and then it didn't really, roll out too well. And they said, okay, well, we're going to go and do this a lot slower, which I anticipate, depending on how bad the markets fall, they may take that same approach this year. But if they are saying that because everyone has that, pretty much we have a lot more money, the economy is doing better, but also because inflation is running a lot more rampant than they thought, they'll say, okay, well, the economy can handle it. There's no reason for us to be injecting over $100 billion a month into the economy. We can just cut it all off immediately. And those numbers, we're going to pretty much raise the interest rates back to a neutral area. Those numbers and projections we get, they'll be temporary. And of course, things will kind of balance out from there. If they take that approach, that can cause mass panic. And that's when I believe we're going to see that mass correction and like the fear in the markets as far as for how, what exactly the bottom of this is. And I think that's where we'll get close to around that $20,000 range. That is an ideal buying opportunity for those of you invested in Bitcoin. And as you know, if the market falls, something like Bitcoin, the rest of the market is going to trend downward as well, which is kind of like what's been happening. So you can expect mass buying opportunities all across the market, which is why I titled this video, "The Time is Near." This is the time where you want to be, if you're not continuously buying, this is the time where you're going to be trying to get cash heavy, save up some money, and capitalize off of some of these opportunities that are coming up. So I want to get into, I showed the charts as far as for Bitcoin and the NASDAQ, but I want to get into what will that mean for Dogecoin. And before I look into Dogecoin, I want to look at, just take a look here at Bitcoin, because I mentioned this on the Doge chart because we're going to compare it to Doge as well when we got those gap ups. And those gap ups is literally just massive amounts of money coming in. And it just overwhelms any sells, puts, shorts, anything negative in there. And the stock crypto literally goes to the moon. And we experienced this at around like the $10,000 mark, basically. In October of 2020, we started that uptrend. We had a bounce here. This is back in like 2017, 2018. I don't have to look, I remember. Yeah. And we'll see that I'm going to draw a line here so we can just see the comparison here. And again, I've made some, not monetary, but I've made some wagers with some people on my channel that I believe that we're going to kind of literally retrace until this level, around this range here, until we get like a bounce. And this for me is, I believe, and even though it may seem dramatic, again, for crypto, it's nothing out of the normal. And for us, I think that going back to that point where I said we're the anomaly, when technically speaking, we have those 50 to 80% corrections. And when we don't, which what technically we haven't to the level that we should, because we're coming off of the shortest bear market in history. And I believe that's because of the anomaly, which is us. We came rushing into the market, dumping loads of money. And then, of course, we're normally at that point where institutions would have taken profits, and even with the intention of coming back, you still don't want to lose control of the asset, especially to retail. So at that point, they kind of have to double down on their positions to make sure they maintain control, and then start breaking it back down to get the paper hands and stuff out of it. That way, they can still take their profits, but maintain control of the asset, so that when they're ready to come back in, they can simply repeat the process. So that's just that. At that point, that's my opinion, but I do believe that that's what happened. That they were looking to take profits when we got that pullback at around like May of June of this past year, but because of the amount of retail money that was flowing into the markets, it just wasn't feasible for them to do so long term. But I do believe now, especially with what's going on in the market, the liquidity issues, and then the Fed saying that, okay, party's over, no more interest-free money, no more raining money from heaven. Now they're between a rock and a hard place. So we're actually going to see that correction that we should have had. And I think that if we're being smart and we're looking at the cycles, we can kind of look into these windows of opportunities and position ourselves to really capitalize, because I believe that because of the amount of retailers that are in the market, you're going to see especially over the next couple of years, you're going to see a lot of crypto millionaires, a lot of people really changing their lives because they're positioning themselves and they're learning these trends. And I do believe that we're going to get that correction here down to around the 19 or 20,000. I know a lot of times people say I'm crazy. It's not going to happen. Resistance, support, blah, 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 all that kind of stuff like that. But I'll make the case that resistance and support matters the most when you have a combination of institution and retail investors. But when you have a coin that's dominated by like Bitcoin, like it is by institutions, and you have days like I want to say like in June or May, had like $500 billion literally leave in 48 hours. Or you have days like December 2nd and 3rd, where you're getting, several hundred million that's leaving the market and like in a matter of hours. That's not retail investors. They literally have the ability to send panic into the market and turn people's portfolios upside down. And I believe that because they need to rebalance their portfolios in the stock market, and crypto at this point is still considered a riskier investment, we're going to see those sell-offs where they're going to take profits and rebalance their portfolios now that it's no longer raining money. For us, that is a golden opportunity for us to come in and take advantage of that. And so that's why I'm calling this range around here, because I believe that we're going to get some support, because I think that most people will be buying as well. There'll be a lot of fear in the market, but I think some people will be buying as well, because I think some people are saying that, okay, we should have some resistance around $30,000. But when you add like the overshoot, because this gap up here, and I think this is where it'll kind of be caught, and mostly it'll probably be retail buying pressure where it'll be caught, because technically speaking, this is some support here, but it's not really. This is really coming up from gap ups. This is not a significant amount of support, because technically you'll say, we had some like a sell-off here, but this is the Fed selling off. So when you say that it's support, that's why I say it has to be a combination of retail and institutions to have support level. This wasn't like that $500 billion, that $700 billion that was sold off in May, June. That wasn't retail money. Like, so when you say it's support, whose support is it? Like, it's not. It was their support. It was their money that they were moving out of the market, and then they came back in. Like, this was not retailers taking profit that took $700 billion out of the market, and this sure as hell wasn't retail that pumped it back up. When you say that this is support, that is really light support. And it's really just decides, okay, if they're going to come back in at this market. And I have no idea what their leverage positions are, or what 0% interest, what the interest rate being hiked up again this year means for them. But I believe that we're going to break through this. And again, we have that gap up here, but I do believe retailers will be coming in. And I believe we can and I think it's a safe bet to say that we're going to catch ourselves around this $20,000 mark. Again, but that's just my opinion. We're going to see. Let's take a look here at Dogecoin to see where this would relate to Doge. So for Dogecoin, this is I'm going to do this similar analysis to saying that, okay, I gave you these numbers like a few months ago, actually. But if you look, I said that historically speaking, within that range, if we don't get a break to the extreme side and we break through the support level around 16, we're going to be looking at around 12 cents. In the event that we have that massive sell-off and the Fed actually does abruptly stop the injection of money and we have that rebalance of portfolios, I believe that we're going to break through. At that point, we have the opportunity to break through that 12 cents. And again, this is a gap up, very similar to the Bitcoin situation, because again, you know, institutions, they were pumping money into the market, so they typically react the same. But there is very little support here. Again, I do believe retailers are going to be coming in, because at that point, it'd be obvious that I don't even need to pull RSI for that it's going to be oversold. But I believe that there's going to be a lot of retail pressure here. But technically speaking, the next level of support will be down here around 5-6 cents. And this is literally just depending on the amount of retail pressure that's coming in. But because this coin is cheap, you can say, okay, well, it doesn't have there's a likelihood where it may not fall completely to 6 cents. And I agree with that. You can have like that 6 to 8 cents range where you can start getting some resistance and it's a lot of buying pressure to go the opposite way. But again, if we look at this here, historically, we're going to be looking at around 12 cents, just percentage wise. But that 6 to 12 cents, absolutely no support. No support whatsoever. So if we get into that 12 cents, 6 cents range, you can literally expect, especially if we're still trending downward just with Bitcoin and stuff like that, you can expect to get a break to the downside. And again, that's going to be a really amazing opportunity. And that's what I meant by creating that window, so that you're able to capitalize off of this, because Bitcoin will hit 6 figures, the market will rise again, and we have these catalysts and stuff for Dogecoin that's going to literally allow us to come through this turbulent time, and we're going to be off to the races. So, and I truly believe that. So I don't want to make this video too long, but I just kind of wanted to weigh in on that, because I know there's a lot of articles coming out. So I just wanted to kind of give you guys some TA and some of the facts. With that being said, if you found any value in this video, please consider subscribing as we close in on 40,000 subscribers for the year. I welcome you to the channel. You can always change your mind later, but if I provided you with any value today, it would mean a lot. And don't forget to like the video as well. It helps YouTube share it to additional people. And don't forget about BlockFi. If you open an account with them, you can get up to $250 in some of your favorite crypto, including Bitcoin and Ethereum. I appreciate all of you guys. Thank you. And until next time.